Good morning, traders. This is Thursday, 8:01 a.m. Chicago time on the 28th of July, 2016. Thanks for joining. This is another Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. The risk overnight is moving off of stocks, it looks like, and into safety. Gold is up 1.17%. Remember, gold futures trading December now, December 2016, the Z contract. The next strongest commodity I'm watching is the Euro futures and Japanese futures, Japanese yen futures, crude oil. And then the DAX is basically flat. Everything else is down, with the U.S. dollar being at the bottom end of the list, being down 0.57%. So funds are moving into safety. We're seeing that slightly here in the trade. The S&P is actually near its close from yesterday, trading 2159.75. So overall, it looks to me like there isn't any aggressive push to the market. So overall sentiment is guarded this morning following the Fed announcement yesterday. As far as what has driven the overnight session, key element: Facebook came out with their earnings. They just absolutely crushed expectations. Came in at 97 cents, adjusted, versus 81 cents. Expected 6.44 billion versus 6.01. Just taking off, and that's really the big one. The next big one is Amgen, 2.84, $2.84 versus 2.74, also beating on the earnings and revenue side. Again, we are in the middle of earnings season. Other news: the overall sentiment with regards to the rate decision. The market did pop down and then it pushed up. We did not get the common, not always, common three-wave structure. The market ended up pushing down to 2152 yesterday on the S&P futures, and then pushing up to 2166 before coming back to the scene of the crime and sitting right where it was before the release. So overall, the FOMC included a phrase that said near-term risks to the economic outlook have been diminished. Many have taken that signal that the Fed is preparing for its next interest rate hike. But again, I'm not an analyst, I'm not an economist, but I'm going to stick to my script in saying that I just don't see any room for rate hikes currently. I would be shocked and I'd welcome a rate hike, but I just don't see it happening. I think this is all just posturing. Fed Fund future suggested a 45.2% chance of December rate hike versus 49.2 on Wednesday morning. And so overall, really, yesterday's release was pretty boring. Didn't do very much. Pretty lackluster trade. That's really it as far as news. I didn't see anything else that was a driver. Initial jobless claims came out a half hour ago, 266,000, slightly worse than 262,000. Continuing claims, 2.139 million versus 2.14, so just a tiny bit better. And that's really it. Let's take a quick look at yesterday's expectations versus what we got, as we always do. We want to always review what was happening, what we expected versus what happened. This is the primary hypothesis. Again, as I said yesterday, the primary hypothesis is there's no choice here on the primary hypothesis but to keep anticipating the break higher, given the formation that we have here and the balance that we're in. So with the gap up yesterday, we ended up actually opening just a tick above The prior day's high of 21.68. We opened at 21.68 and a quarter, giving us an open auction out of range. The expectation was for a dip down towards 21.64 and a quarter. And then a rotation higher towards 21.74 and a quarter. You recall this from Monday, Tuesday, and Wednesday. The same hypothesis every day. Did not quite work out. Hypo 2 instead did work out again. So we're in 3 and 3 this week on Hypo 2. We had an open auction, push higher, take out the overnight high, and then dip down below to the key target being 21.61 and a quarter. 21.61 even actually is the MC point of control. I drew a blank there, and a couple other things while we're there, a naked point of control and so on. So it's overall we hit our target before the FOMC release, and from there all bets are off. Once the just something I didn't maybe mention. Once we get into a release midday that is as major as the FOMC, you essentially, what I essentially do is disregard my prior hypotheses and create a new hypothesis based on that information. Remember, these fundamental based releases are likely to force a revaluation of whatever it is we're trading, and I have to look at what it's done just then on the release to decide what the hypothesis into the close is likely to be. So if we look at yesterday's action, the release happened right here. This is the initial wave. So this is the SOC. This is wave 1 right here. That's wave 1. Then the expectation is wave 2 is the pullback, although it did pull back a heck of a lot more than wave 1 did. That's a first hint that something goofy is going on. Generally, we get, let's draw it over here, we get a large wave 1, we get a pullback wave 2, it could pull back more than 50% or so, pullback wave 2, and then we get the continuation wave, and that's wave 3, and that's the wave that I look to trade. I've been doing this, that's basically how I've traded the Fed ever since I used to scalp equities as a SOS bandit, and it's been the same basically, where we're just not able to anticipate this first move on the release, but we're looking for this continuation move. And so yesterday we didn't get that. Yesterday we got wave 1, wave 2, and then just this really chop, and then it continued higher. So we never got that wave 3 coming down. This would have been wave 3 here. It just wasn't very easy to trade, is my point. So I didn't actually trade it. I just sat there and kind of watched it happen. But I'm just not willing to, in this kind of trade, I'm not willing to stake my funds into something that does not give me a clear edge. One thing to note is look at the volume down here. We put in a low at 21.52 yesterday with very little volume, giving us basically an excess low. Another way to look at that is to look at the market profile, and that's the definition of an excess low here. So what you want, how do we use an excess low in the future? We're going to essentially, where this becomes useful is if at a later date the market drops below 21.55 and a quarter, we know that we are retesting what used to be an excess, and you do not stand in the way of that. In other words, you don't buy below 21.55 and a quarter on the very next retest. You need to stay out of the way. We're essentially coming back to a prior price that was considered an excess, and we see it here as a very, very low volume. But overall, we ended up with an FOMC day finishing with a profile that has a valid value area, which is not very common. Valid value area, a distribution that looks jagged but pretty useful. 21.63 and a quarter down to 21.56 and a half, being the value area. And then on the close, we got Facebook, which caused the NASDAQ to take off just like it did in Apple. But overall, the overnight session shows that there was nothing new to price in. We ended up moving the point of control up slightly from the prior day, but it's still below the prior sessions, prior Globex sessions point of control. Essentially, what have we done in the overnight session? Absolutely nothing. We have basically, we're basically trading inside of yesterday's range. We've tested up, we've tested down, we are stuck in the middle here. We know that the point of control is above. This is important to note here, 2164. Again, that's in alignment with that level that we have on our chart. 2164 being the overnight point of control. The mid is above us, so the expectation coming in is going to be influenced by the fact that there's likely to be resistance on the up rotation. What does that mean? What that means is that we are likely to open. We're opening in range, in value. Okay, so we're opening inside of yesterday's value. Nothing new to price in. The overnight session has not priced in anything new. And what that's likely to show us is an open auction in range. Expectation is for a push higher initially. The overnight inventory is just slightly on the sell side, so we're looking for it to balance upwards. And then overall, I'm expecting this to chop around in here, continue to create a balance, and then I would love to see us break lower, and that's where the hypo ends and wishful thinking starts. There's nothing to glean from this because we are in balance in the balance zone inside of yesterday's trading, which is in balance, and it's just like balance over balance over balance. And it's hard to predict whether it's going to consolidate and push up or consolidate and push down. But if we can get down into the 2152 here, that would be great. I'll be looking short anything below 2155 and a quarter on the pullback up. I would look to short for a continuation through 2152 down to 2149, and that takes care of our composite low volume node. This is like an untested area or almost like a gap area. There's very little volume in this area. Prices were rejected down here on the 14th. And that's what I'm anticipating. Again, the primary hypo is for a test up, close the gap, touch the point of control, and test the value area high. From there, it's anybody's guess. I really don't have an edge here to tell me that it's more likely to push up on hypo 1 or lower. Okay, same thing for hypo 2. I don't really have anything else to share with you here. Hypo 2 is the same thing, except it's likely to push in the opposite direction. So overall, I could draw it on here, but I'm gonna leave you with that. There's not much I can offer here other than to say that we are absolutely in the middle of a lot of summer trading. So let's push this profile forward. Let's include yesterday's volume, and you can see the profile on the left, how it's changing as we add these bars, and you can see that they're not having very much influence on the overall composite. So the prices are the same. We have our 64 above us, 64 and a quarter with the overnight VPOC just below. So I'm looking for this on the first touch. I'm looking for this to be resistance. I'm going to look to sell this against the value area high. So there's a lot of confluence in this area initially. I'm not expecting it to drive through. So it creates an opportunity for at least a 3-point rotation. And I'll look to gather 2 points, 2.5 points out of that if I can. We still have our value low, which is the overnight low. So you can see value low, this gray area here, is also the overnight low. There's confluence there. So I'm expecting rotation in here today. What happens in rotation is it consolidates, especially on normal or high volume. What that does is it creates compression. Balance leads to imbalance, and then we're looking again, as I said, we're looking for it to break one way or another as it continues to balance inside of the prior day's value, inside of the prior's couple of weeks MC, and it's setting up to make a push out of here, in my opinion. That's all I had for you. Yesterday, I asked you all to like the video. If you're watching the video on the S5 website, hit the YouTube button, hit like. I believe it got about 250 likes or so. I really appreciate that. What that does is it doesn't stroke my ego and that you like me. What that does is it gives the video importance with YouTube's algorithm, and it provides us with whatever the new tools are for live streaming on YouTube. I'll get invitations to use them just like I did for 1080p once it came out, before it was open to the public. So if you would continue to like these videos, if you remember to like them, I'd appreciate it. You can even go back in time and like old ones if you like, but just if you can hit the like button today, that would help create a better stream for you ultimately. Good luck, and I'll catch you tomorrow. Stage 5 traders, we have our AMA at noon today. We have a trader intervention. We have 2 traders, 1 crude oil trader, 1 ES trader, that we're doing interventions for. You'll see the invitation for that in your email. See you at the webinar. Take care.